Thank you, Maya, for this opportunity. Welcome, everyone. Happy holidays, wherever you may be, wherever you're joining us today. One thing we all share, there's a 100% mortality rate. But in today's world, our digital assets do not disappear with us, they remain. So for all those in attendance, let me ask you this. What happens when the only person who knows the passwords is no longer there to tell us, or no longer has the capacity to show us or to tell us? Today, we're talking about digital assets and the very real responsibility that comes with advising clients in this space. Hi, everyone. I'm new to Trust Properties USA. I'm the Director of Strategic Partnerships, having joined the firm in January of this year. I spent the last 15 years being a competitor to Trust Properties USA here in San Diego, specializing in estates, trust, and probate real estate. And I am thrilled now to be part of the team. Joining us today is our presenter, Charles Lambert, CEO of DigitalLIFEBox and chairman of the Digital Estate Planning Institute. And along with Alex Memka, he's the co-founder and technologist behind this amazing platform. So as Maya mentioned, please go into the Q&A and tell us where you're from. We really want this to be more about family and getting to know one another. So now the question that I started this workshop with, it's no longer theoretical. In the estates, trust, and probate world, we see critical situations, financial information, personal information, emotional information that lives entirely in a digital environment that only one person truly understands. And when that person is no longer there, the fiduciaries, the attorneys, the families, and people who work with Trust Properties USA are left trying to piece all of this together, usually in a chaotic format. So before the end of the day, the goal, and because of the end of the day, the good planning that we actually are all trying to create, if we do our jobs well, is that we want the families, after they lose a loved one, to be able to celebrate Thanksgiving, Easter, holidays together in a positive format, rather than arguing across the table about where are the passwords, missing information, or even worse, stepping into someone else's identity online or walking into the bank and trying to assume someone's identity. So this is an action-packed session. So ask your questions in the Q&A. We're going to end this at the 55-minute mark. So we'll try to get to as many as we can. So hang tight. So please ask your questions in the Q&A. And one quick note, hang around towards the end because we will be having a drawing for those in attendance at the end for a $100 Amazon gift card. And with that, Charles, we're glad you're here. You take it away.
Thank you, Ron. Thank you, Maya, for having us. And thank you, more importantly, for everybody for taking time out of your busy day to join us today. Let's see. Okay, let's see here. So before we get into this, just another quick note. Today's discussion is educational. We're not providing legal service, and nothing here replaces, of course, your role or judgment as counsel. The goal is to give you a structured way to think about digital assets and the risks around them. Also, we do want to see you again, so we'll have a few places where you'll see these resources. I'm sorry, here. This is the note. There's going to be a few places where you'll be able to see these scans that you can use to either link to Trust Properties USA or to actually book a 10-minute walkthrough with those of us from DigitalLIFEBox. So again, glad you're here and thank you for joining, and let's get started. So what we're going to cover today is something that's becoming increasingly visible. Ron covered it pretty well, but it's still, the things that we're talking about are widely understructured, and that is the way digital assets are created, accessed, and controlled. It's fundamentally changed. And in many cases, planning hasn't necessarily kept up, at least from what we're hearing from many estate advisors and planners. So what I'd like to do today is walk you through where the real risks are emerging, how they may be showing up in your practice, and what that may mean for fiduciaries and planners We'll also look at what can actually be done, some practical things you can do with your clients. And we'll have at least one Q&A break. I've got two scheduled. And then don't forget, like Ron said, we have a gift card drawing at the end of the event. So let's get started with what's actually changed. This isn't like it, things have happened incrementally, but really all of a sudden we've got this big structural shift. And that is that, like people like me, I like to start out by saying I'm a member of the first generation that's going to die after evolving from a fully analog life to a fully digital life. And that transition has happened within all of our lifetimes. Maybe you've gone through the same. I'm sure it's the same for many of your clients. I remember, like, I was my dad's remote. And so that's where I started. And now everything that I do is, I mean, my digital world really controls my personal operating system, right? So most of us, just to see this kind of visually, most of us remember when access and ownership were tied to something you could hold, you could find, you could hand to someone else. But today, that's not always the case. The way we interact with the world around us has completely changed. Um, and much of that life hides behind logins, account credentials, and other forms of digital gatekeeping. So that's the way we bank, the way we invest, the way we manage our homes, run businesses, communicate. And there are even like new kinds of assets that weren't even in existence 10, 15, 20 years ago. Of course, crypto is one of them. Um, but I have assets that I want to make sure are included in my estate plan, and those are all online. So, for example, I own domains. Every time I have an idea, I go acquire the domain. And now I have a portfolio that's valuable, but it's only digital. So everything is moving to digital, and the systems that we have are no longer just governed by physical possession. They're governed oftentimes by access, and these assets aren't visible. They're not easily discoverable, and more importantly, they're not as transferable as the physical legacy world. Probably most of the clients that you're dealing with have the same issues that they're going to be having to manage as well. At the same time as this great digital proliferation, there's this great wealth shift that's happening as well, and I'm sure everybody here is aware of that. I've heard, 30 trillion to 80 trillion dollars moving between generations, but most of those numbers are only talking about physical assets. So when I hear this thing about 30 trillion, 40 trillion are going to be moving in the next 20 years from one generation to the next, mostly falling on women, by the way, apparently. That's retirement accounts, real estate, and so forth. It does not, those estimates do not include physical assets. And I bring that up because you listen to guys like Larry Fink, and you read as much about this stuff as I do, and you see that the whole world is being digitized. So, for example, in real estate, you have issues where there are people who are getting scammed out of their homes, out of ownership, but there are people who think that by digitizing um, records like deeds and things like that, it'll be much more difficult for people to have those scams. So tokenization is really happening. It's happening quickly, and it's blurring property versus access rights. So yes, wealth is shifting, but it's shifting in addition to moving, it's shifting in a digitized way. Like I mentioned earlier, when I talk to people about digital assets, the first thing they think of is crypto. And when I talk about what I do and so forth with DigitalLIFEBox, people think, well, I don't have crypto. I don't have a need to really manage my digital assets. And the truth is that crypto is really a small but dramatic part of the digital estate, right? The real digital estate is much bigger and grander, right? It's everything people rely on every day. So banking, insurance, email, investments, utilities. If you run a small business, like many of you do, you have business systems that are all digital. So these aren't really edge cases anymore. This is infrastructure. Yes, crypto is a subset, but the digital estate really now governs continuity of families, continuity of how people operate. Um, and many people, again, just to continue the thought, many people underestimate the problem. So I think this is a low average, but I didn't want to overestimate. But the average adult maintains at least 100 online accounts. Um, most are not inventoried. Um, and many people, unless they're prompted, don't include the things that are financial, operational, and sentimental in value. Um, the things that people overlook may include those alternative assets, like I mentioned, domains and things like that. Um, and oftentimes sentimental value. So when I talk about digital assets and people say, well, I don't have crypto, I say, yeah, but you maybe have 20,000 photos in your iCloud. And they're like, oh yeah. And so, for example, for my wife, she's probably more interested in um, like she would she would be devastated to lose the 20,000 photos on her iCloud than maybe $600 in a PayPal account, right? And I think maybe a lot of people have that same concern. So I did my own personal inventory and I operate in this space, right? I had 270 accounts. And the thing that you have to, that like I take away from this, it became very clear very quickly, is a big portion of my life is controlled by digital. And from an estate planning perspective, things aren't equal, right? That's another kind of a um, hurdle that a lot of people have when it comes to digital assets. They think they're all the same, right? They just picture digital assets as being um, common, similar, but they're not. Um, many are they're not equal in importance, in value, in risk, in sensitivity, or in dependency. And that's part of what we're going to be talking about here next. So just by way of example, um, think about a think about a $10 streaming subscription. Every month you pay $10 to Netflix, let's say. That's a low financial value and low importance. Um, but a primary email account is basically no financial value, but it has catastrophic dependency because it might be where you do your multi-factor authentication. So if I'm trying to access an account and it's asking me to go into my email to authenticate, that becomes a very, very, very important um, uh, digital asset. Um, this is where things become very real, right? Physical assets are increasingly controlled through digital systems. Why that's important in a call like this is because when you transfer a home, that's great. But if you don't include the operating system for that home, you're kind of handing over a car without the keys in a lot of cases. So that's not only homes, that's vehicles, it's security, it's medical access. So even if ownership of the underlying asset is clear, operational control may not be. And these are the things that are, now fully integrated. And when you're talking about estate planning, they need these digital that controls the physical or that's integrated with the physical needs to be looked at holistically and included. So the question becomes very simple, right? This is the question my wife asked me uh, when I was bragging about the performance of one of my investments. She was saying, man, I can't hear about your crypto anymore. But then she said, but what happens to it when you die? And I was like, oh, now you're interested. But this is the question. What happens to all of this stuff when you die? So to answer that, we really have to get into like how these two worlds operate very differently. So there's physical world versus the digital world. And they have some very distinct areas. For example, discoverability. Historically, assets, as we've known them, were physical. They were recorded somewhere. They had visibility. They were very discoverable. There were processes available to uh, find out information about them, particularly around bank accounts, real estate, and so forth. Digital assets are the opposite. They are not public. They are hiding behind credentials. Um, so if somebody doesn't know it exists, like a fiduciary, an estate planner, an advisor, if you don't know it exists, if a partner doesn't know it exists, if a spouse doesn't know it exists, um, they can't act on it. And that's the first real risk. And that's discoverability. The second one is about persistence. So physical assets tend to persist. The house that's there today is probably going to be there tomorrow. Digital assets have much more, let's say, fragility, right? They can be deleted. You can get locked out. Um, you can have subscriptions, for example, that run well beyond their need, and they can drain an account, or they can pile up on a credit card. So, for example, when I pass, I'm not expecting my wife to maintain my gym membership or some of my other things that I use throughout my daily life, but they're just personal to me. To let them run would be hundreds of dollars per month, possibly, um, of money down the drain that should be hers and my family's. So um, what's happening these days is they even have phrases like digital orphans and digital ghosts because it's estimated that tens of millions of accounts have been abandoned um, or become inaccessible each year. So obviously, this is critical information, value, and tools that are no longer available to the loved ones, and and that's the problem we're trying to resolve here. So first issue was discoverability. The second thing is persistence. And then this is really the core issue. In the physical world, ownership comes down to the title. If you have the title, that implies ownership. Ownership implies authority, what you can and can't do with regards to disposal of that asset. In the digital world, you can have credentials, which can give you access, but they don't necessarily give you authority to act. Um, and that again is a very important part of what we have to understand about the difference between physical and digital worlds. So this next section is really about UFADA and how the law has attempted to respond. Many of you, I'm sure, are familiar with RUFADA, and it was designed to modernize financial fiduciary access to digital assets. Uh, Unless I'm mistaken, the last update was in 2015. That's 11 years ago. And this was a revision of something that was in the early 2000s. So, here we are 10, 11 years later, and everything's changed and it continues to change. So technology changes, culture follows it oftentimes. Then the legal process tries to keep up. RUFADA really tries to reconcile federal privacy law with platform terms of service, which we're going to talk a little bit more about in a bit, and then really trying to integrate all of that with the traditional fiduciary authority. One thing to remember is that RUFADA isn't a guarantee. What it grants is it gives fiduciaries the legal right to request access. But that's the key word is request. It does not guarantee control. Um, so um, it doesn't eliminate what the platforms can do. And that's a very important part of the estate plan. So RUFADA's created this hierarchy of control. Essentially, the first thing is platform tools. So Google, Apple, um, these tools allow the user while they're alive to direct what happens at death. If there are no elections within these tools, within these online platforms, then the next priority is, okay, well, what do the legal documents say? And then if they're not addressed there, then basically it's the terms of service of those or default law of those digital assets. So if those plans aren't aligned, they can essentially break. I'll give you an example here shortly. Um, but even with Rufata authority, custodians of those assets retain discretion under their terms of service. They can maybe give access, but it could be partial. Um, Communications, for example, electronic communications, if somebody wants to email on my behalf or do something in my account, require very explicit consent. And even still, transferability of those accounts may be restricted or denied. So somebody may say, you can access the account. Here's what you can and can't do within that. So execution is really still dependent on what the platform says you can and can't do. So that's at the platform level with Rufata. Two other interesting points as I've thought about this over the last few months is that states vary, right? So adoption is broad, but it's not uniform. Um, Most states have enacted versions of Rufata, and then some have modified statutory language quite a bit. Um, for example, I know many of you are in California, and California has its own variation of Rufata. New York also has a different statutory approach to it. Some states haven't adopted it at all, though few. So the key point is, depending on where you are, um, even though the statutes are similar, they may be applied differently. And then this is kind of more of a thought thing. But as I was thinking about this a few months ago, I was thinking, well, what if um, what if I created an account on a platform? Their headquarters is in California, their data center is in New York, where my data is. I created the account when I lived in Texas, and now I died in Florida. So, who has jurisdiction? And as I was researching this and talking to some not fellow, some attorneys that I know, um, they basically helped me really categorize it like this, so that the domicile of the dead person uh, is covered by probate law. The platform terms of service are covered by contract law. The corporate presence is based on their personal jurisdiction, and then data location deals with privacy and cross-border considerations. So multiple legal systems might apply to a single account. I think this is more informational. I don't think really anybody's ever run into problems here. But the point is this is all changing. And when statutory variation meets this layered jurisdiction, you never know when somebody makes a claim what they want to do. So the point is, make sure that you're really understanding what people have, document it, and I've got a few practical ways to do that here. This looks like this is the last screen we're going to do on Rufata, but this is perhaps what's most applicable. First thing is inventory the platforms tools. So know what exists. Do they have Google, Apple, Facebook, financial platforms? These are often the first layer of control. And then the second point, this is kind of like the important thing. Align the online tools with the estate intent. So, for example, if the will says all digital communications to my spouse, but Facebook legacy contact, let's say I set up my Facebook legacy contact is my daughter or my sister, I have a structural conflict. So either update the platform or revise the estate language, but don't leave them misaligned. Obviously, also avoid any contradictory instructions, point number 3. And then fourth, as you all are very good at, document everything. Document the decisions, who has access, what authority they have, and how that ties back to the plan. So documenting access and authority is extremely important. And I guess really the thing is that digital estate planning is no longer just about documents, it's about coordinating uh, between legal documents and platform control systems. So we're about halfway through, and I wanted to just take a quick check of if there are any questions. So, Ron, are there any questions to cover? Has anybody dropped any questions in the Q&A?
We've added all the Q&A questions to the answered section in the Q&A. So let's see, I'm going to pull one up now. The first
Okay.
question is, how do companies like Google, Apple, or Facebook handle accounts after death?
Okay, that's a good question. And that basically is what we were just covering. So each of them have the opportunity for the account owner or the account holder to create in Apple, let's use Apple as an example, a legacy contact. And if you go in and like maybe a year ago, they were really pushing on all of your Apple devices, hey, set up a legacy contact. And that basically bypasses um, legal problems, right? If I say I want my spouse to be my legacy contact, um, they know her. It's almost like a know your customer, a KYC kind of thing. If they have her, if she's known, then she can directly access it without issue. Without that, you can get access, but it takes time. Each of these platforms have their own process. Microsoft, Apple, Google, really most of these platforms have hoops you have to jump through. They're not quick. They require oftentimes that you provide proof of death, proof of relationship, and so forth. So there's process, but it's painful. It's much easier to take care of it up front in the planning phase.
So another question is, can DigitalLIFEBox integrate with password managers like Google or Apple password keepers directly, or does every account need to be added manually?
Soon. That's actually the thing we're working on is integration with popular password managers because yeah, we feel the same way. We make it very easy, but we also understand that it's easier to just integrate what you've already got. That's a great question. I love that. Alex, was that from you, my partner?
We have another question from Nikolai that says, when you inventory your digital accounts, do you create some sort of template for that, or how did you practically go about it?
Yeah, there are templates. So, um, executing all of this structure that we're talking about, it's structure, right? Structure is what's important. We do have templates, and really at the end, we'll talk about something called DigitalLIFEBox, which we've created, and that's exactly what it is. It's templates, it's structure, including digital estate plans and things like that for attorneys. But yes, structure is very important because you're talking about the same things. You want to know basically the category of the asset. You want to know what the asset is. You want to know the URL, how to access it. You want to know the credentials. If you don't have credentials, maybe you want to add a recovery code. This is me saying what I would put what I have put in my digital estate plan. So I have recovery codes so that people don't have to worry about MFAing on my phone, for example. Most importantly is we believe that it's super important, and it is one of the many distinctions between a structured approach to digital estate planning and asset management versus a bunch of accounts and passwords on a spreadsheet. We have the ability to actually pour meaning, uh, really telling people what to do, how to do it, what order, what's important. I have 270 accounts, like I mentioned. I don't want my wife to go through that spreadsheet and figure out what's important and what's related. So many of those things don't go into my DigitalLIFEBox, but the ones that are important are, and they need to be like with this, start here, right? So yes, structure, templating, all very important. And that's a great question. Thanks, Nikolai.
I think, Charles, I think we're ready to go back.
Okay. By the way, you see these QR codes. Once again, if you want to talk to us later, please feel free to hit the Trust Properties QR code or the Digital Life Box one, and we will get back with you.
And please
So,
continue to add your questions to the Q&A. We'll be doing one more session.
yeah, thanks, Mina. Okay, so even with the legal frameworks in place, risk still does persist. And this is again where I talk about that all assets are not alike when it comes to digital. Um, when I talk about digital asset risk, a lot of people think, oh, well, yeah, that I need to make sure that I've got a good password and I've got all of that kind of stuff. Yes, true. But what I'm talking about is risk to the people who have to deal and who will receive who will receive these credentials. So a good platform actually will actually tell you what are the risky assets and then what are the ones that you can get by with. For example, digital assets, as I've mentioned before, they're the sensitivity of the information, the financial consequence, the legal exposure, and the identity impact. And the way I look at these three tiers of risk is basically the closer you get to financial control or identity without being a co-owner of that account brings you closer to that legal exposure. So the first one, you have administrator or access risk, very limited legal exposure, really very little problems with these tier one type assets. Tier two is where you start getting into terms of service and operational risk with these accounts. And then tier three is where you're getting into, it could be like a social security account, or it could be some kind of banking or emails. Emails are an interesting one. We'll talk about that here in a moment. So without clear authorization and defined scope, access by a beneficiary or an executor may create unintended liability. So let's look at these tiers again. So tier one, here's something that a beneficiary might attempt. Well, they might access my Wi-Fi password. That's okay. That's fine, right? No issues there. They might view some shared photos that I have, like let's say in some shared account. They may manage my streaming, things like Netflix or Spotify. Very minimal legal exposure, primarily privacy or inconvenience issues. The mid-tier is where you start getting closer to possibly getting into terms of service issues. You're not really hitting legal, but you risk things like if you don't do it the right way, you might get an account lockout. And then the third tier is the most important. This is the one where we really, really need to advise well. And that is that, if I say to my spouse, look, in my estate plan in DigitalLIFEBox, for example, for my email, I've got a final out of office message. Just take it, cut it and paste it and put it in. That's a very defined scope. And also within that system, it has very clear authorization to do that. So I've made my intent known, I've made my authorization to her known, and then I've limited her scope into what she can do. She cannot go in and start sending out emails as if she's me. That could actually get her in trouble. I could give my son my crypto keys, my seed phrases, and that could get him in trouble if that crypto is subject to probate, right? If he wants to buy the Lambo, and he takes it and he drains the crypto wallet, and then that goes through probate, and we've got issues that can give him problems, right? So even these well-intentioned access still can create liability. We believe letting people know during this transfer process of what the risks are with those assets is extremely important. So beneficiaries, I mostly talked about all of these kind of things just now. The risk to executors, primarily, all of these things complicate the probate sequencing. If somebody goes in and starts messing around with financial accounts and so forth, that creates a risk to the probate process. You could also trigger security resets, and even having premature access to accounts prior to formal appointment. So digital estate planning requires like a staged engagement process. It's a sequence. And the problem is that for a lot of people, the natural tendency is, oh, I've got access. I'm going to go in and look. That may not be a problem looking, but taking action can be a problem. So that's what we like to tell people within our own service. The exposure for attorneys, and this is something we hear a lot, is, look, I want to know what our customers have, what my clients have. I need to know they have the crypto. I need to know they have these online bank accounts. I need to know they have all of these things of financial value or sentimental value that need to be distributed. I don't want the liability of having the keys. I don't want the seed phrase. I don't want to have that until the moment I need it. When I need it, that's great. But anything before that actually opens me up to some liability or other kinds of issues. So really, all of this is to say that digital literacy needs to become part of the fiduciary core skill set. And hopefully courses like this help with that. Again, really just to summarize these slides, stage 1 is inventory awareness. Stage 2 is verifying authority. Stage 3 is access being granted. And then stage 4 is finally, being able to take action on those assets. But immediate login is rarely the safest first step. But you can't get to that unless you know what people have. So what you can do about it. Structured discovery. So general process of discovery would look something like this. Know what exists, what systems are involved, what depends on them, accounts, devices, recovery pathways, recurring obligations. And just remember, mitigation starts with discovery. You can't manage what you can't see. This discovery, the dependency thing is kind of an important part as well, right? Understanding what systems, what physical assets have dependencies on digital ones. Second is authorization. So authorization should be explicit and defensible. This is where things break, right? Intent is good, but it's not enough. It has to be very explicit. It should be documented, and as a beneficiary or as an executor who's gone into an account, I should be able to say, look, I have this authorization. It's documented by the deceased. Otherwise, access can be denied. Actions can be maybe actions can exceed what's actually permitted. And then again, along those same lines, the scope of authority, who can access what, whether they can act or just view, when they can act, and even whether they can communicate on someone else's behalf. Clarity here, reducing any ambiguity, reduces the risk. After identifying and categorizing digital assets, the best thing to do is making sure things are aligned, right? So make sure ownership, access, and estate intent all match. That may mean adding authorized users, aligning account titling. So, for example, because I'm involved in different things, I have various bank accounts. My wife is on some of them, but not all of them, right? There are places where my co-founder, he and I are both co-owners on those accounts. So making sure where if you want somebody to have access to something and have them have the least friction, co-titling, taking care of these things ahead of time, as long as there's no other risk to people having that co-ownership during lifetime, is the best thing. Again, removing ambiguity is the simple goal. I'm going to skip this. This is basically a repeat of what we said, but it's very simple. If someone's going to inherit an account, doesn't have access, you just need to know, do I add them now? Do I rely on some post-death process, for example? Because if you're waiting until after death, you can't go back. So you have to think about it now. And then this is really the crux of everything, a digital estate plan. Actually, in your control bar, you have a little hands where you can raise a hand. And Maya and Jolene, I'd like for you to just check that. How many people here are actually creating digital estate plans for your clients now? Because all of this really comes together in that plan. This does not replace a traditional estate plan. It extends it, right? It inventories, it categorizes risk, it it creates these pathways to authentication, explicit intent, defining authority, staging access, and so forth. This is about bringing structure to the estate plan. Did we get any hands?
I see several hands up. I saw one
Okay.
from Nikolai and many others on this list.
Good.
Trying to scroll down and see all of them.
Cool. Okay, good. Well, you're ahead of the game then. Very good. So everything we've discussed comes down to structure, right? And it only matters if it can actually be implemented. So inventory, staged access, audit clarity, which is very important, intent, clarity of intent. That's what operationalizing digital estate plans look like, and that's where we come in from DigitalLIFEBox. So as mentioned in the communications via email that many of you received, we are providing a complimentary 12-month professional access to DigitalLIFEBox. I will send those to everybody here on the call later today, but you'll have a code. Go in, log into DigitalLIFEBox. Here's what you'll see in there, and I'm going to go through this briefly, but basically a structured inventory, very elegant dashboard that you can see everything in one place, organized, accessible, various ways to look at this list view, category view. We have the next most important thing, really, you have the assets, but without the people, your beneficiaries, and then basically reporters. This defines who can access what before anything happens. And then a transfer planner. So this controls how and when assets are actually transferred. It's very intentional. It's not reactive. We have things that are scheduled. You can see my daughter's college fund. This is going to be scheduled to deliver to her on her 18th birthday, whether I'm here or not, for example. Our transfer planner helps people do that. We bundle things that make sense together. So our home life bundle, these are things my wife knows very well, but when she's trying to figure out what to do with my dead body, she will receive this in her DigitalLIFEBox account. It looks exactly like this. It'll be a bundle of things. We have the most important thing from your perspective, perhaps, is this next thing that we provide, and this is the digital estate plan. Here you can see the assets that we have, the category, which platform they're on, the risk sensitivity. You can see what's been shared with other people already. So with DigitalLIFEBox, you can share things that are common. So my wife and I share many accounts, and if I update a password or something like that, she gets a read-only copy of it in her account, and then she has the same things that she's shared with me. And then here's the things that we've actually transferred, right? These are my planned transfers. Some things are dated in the future, and some things are transfer on death. And you can see actually what's included in our home life bundle. So documentation, contact information for our handyman, various router passwords, IoT devices, things like that are included in here. And so this gives you as an executor what you need to know, but you don't get the credentials, right? And these are all things that you would get that my attorney gets from me anytime I make a change to my digital estate plan. she gets a copy of this digital estate plan delivered to her automatically. And that's it. So if you want to see how this works in your practice, instead of kind of theory that we've been talking about, I'm happy to show this to anybody who's interested. And so we've got 15-minute little sessions that you can scan and book, or you can go to, you can reach me at clambert@digitallifebox.com.
Maya, we have some questions, and I know we're running quick to the 55-minute mark. Do you want to give Charles some of the questions that have been entered?
Sure. So we had an attendee ask, should an inventory of my digital accounts live in my will and or trust? Is that safe enough?
Well, it can, I mean, a will says who gets what. First of all, I'm not an attorney. You guys are the attorneys. So I don't want to dispense legal advice. My thought on that is a will says who gets what. It doesn't say how. And unless you actually explicitly put it all in there. When it comes to things like crypto, those could be complex ways of accessing those accounts. And if things change, like passwords change often, those wills need to be updated if you're using it that way. If you use a tool like DigitalLIFEBox, it's living and it's constantly updating when life changes. So I hope that answers your question.
Great. And then we have another question. It says, I have a deceased client that had a crypto folder on his Google phone, and although he gave his fiance all his info, he forgot to give his phone password. In her role as the PR, she subpoenaed Google, but they did not disclose the info that would allow her to get into the phone files itself. Any ideas on how to get to this file?
I don't. I mean, it sounds like she went to the source, and that's why these are great. That's a great example because you could probably find ways to do it legally, or through hire ethical hackers. There's different ways she could probably do that. That costs thousands and thousands of dollars versus a subscription to DigitalLIFEBox, which doesn't cost thousands and thousands of dollars, even for a lifetime plan. So in DigitalLIFEBox, we have laptops, devices, other kind of things like that, where you can put all that information. And that's really too bad. And that's the motivation for why we created DigitalLIFEBox, because those are difficult stories. I don't have the answer for you though. Sorry.
All right. And then we have a couple people who are having trouble with the QR code. So I've dropped my email into the Q&A. If you want to book a walkthrough with DigitalLIFEBox, I'm happy to send you that Calendly link. And then one more question here we have time for from Rebecca. It says, what type of security does DigitalLIFEBox have for all this sensitive information, especially for crypto keys?
Alex, are you on the call?
He is on the call. Would you like me to give him speaker access?
Yeah, that would be great. I could tell
Okay.
you, but while you're getting him on, I'll tell you that one of the things that's really great about DigitalLIFEBox is the technology upon which it's built. First of all, we don't own any of your data. We don't store any of your data. It's distributed via blockchain. So blockchain is at the heart of DigitalLIFEBox. Things are put in a digital wallet that you own. And Alex, jump in when you're on.
Yeah, I'm here. Can you guys hear
Okay.
me?
Yep.
We hear
Yep. Loud
you.
and clear.
Yeah, so you covered the basis. We use blockchain, which natively guarantees privacy, and you are the only one that has access to the wallet. And then on top of that, we have implemented post-quantum encryption, which is the expected problem to be happening over the next 3 to say 10 years. With the blockchain or anything else. Basically, the technology we use to communicate over the internet is threatened by supercomputers, specifically quantum computers. So instead of waiting for that to happen, we implemented industry standard post-quantum encryption, so that even if someone does get into the wallet, they will not be able to see anything without that information which is impenetrable even with quantum computers. Yeah, security is how we started with this, and the privacy and visibility. Charlie, you went through specificity quite a bit there, but sharing of the assets and giving partial view and then transferring those assets is really how we ensure that the privacy that the person is expecting is there with a guarantee by the system. But when they need to actually share and inform others, it's done without any hassle and again, guaranteed for that security.
So Charles and Alex, thank you so much. This was outstanding. And for those that are on this webinar, use the platform. You have a 12-month complimentary subscription to DigitalLIFEBox. Use it, explore it, form your own professional perspective. Charles and Alex want your feedback. This is a living, breathing, moving target, and they would love to get your feedback and have you use the platform. So thank you for that. And at the same time, the role of Trust Properties USA, we are your resource when it comes to all things real estate within this estates, trust, and probate process. As again, for somebody who's been a competitor and now on the team after 16 years, I can tell you, I've been with many brokerages. I've been through it all, 16 years of estates, trust, and probate. Nobody is more dedicated, focused, and on target with this process. And with that, we have the most amazing, we have a 1-year video capsulized in 1 minute for this amazing journey that we took out in the Inland Empire of Southern California. So I'll go ahead and roll that, and then we'll have the drawing.
Hi, my name's Elizabeth, and I'm a realtor with Trust Properties USA. We've helped thousands of families just like yours through the complicated process of selling a property in trust or probate. We handle everything from A to Z, whether it be securing the property or handling an eviction. We help you avoid foreclosure or even with a full-blown renovation. And all of this is with zero upfront cost to you or the estate. I want to make sure that you get to keep the equity that your family worked a lifetime for. Let me introduce you to 6036 Eastwood Avenue in Rancho Cucamonga. This family actually literally watched this home get built from the ground up. As you can see, it's all original. Here at Trust Properties USA, we help you take this to this. Or from this to this. Or we can also take this to this. All of this with zero upfront cost to the family so that they could keep the equity that their family worked a lifetime for.
Okay, so I'm going to do one other thing. Can you still see this crazy spinning wheel?
We're ready for our Amazon gift card drawing. If you are on the webinar and we have your email, we'll be announcing the winner via your email and sending it there. So Charles, you want to click to spin and see who our lucky winner is?
All right, here we go. And the winner is L. Askew.
Congrats.
Can we take a snapshot of that?
Yes, got it. You will be getting a $100 Amazon gift card for all your learning today. Congratulations.
And thank you all very much for attending. I'm going to hand it off to Ron to finish up. And thanks again for joining.
Thank you, Charles. Thank you, Alex. Happy holidays to everybody. Be safe, be sound. Please go ahead and explore this opportunity. This is not a future issue. This is a now issue. Thank you all. Maya, thank you. And everybody, be well.
Take care.
Thank you.
Bye-bye.
Take care.
Take care, everyone.
Thank you, Maya.
Thank you.
Thanks for putting this together. Bye.